What's going on, everyone? It is an exciting time to be a trader. We are only 0.2% away from a brand new all-time high, so hopefully you had a good day in the market today, but even if you didn't, that is okay. Tomorrow is set to be a big day, given some important PCE inflation data that we'll release, and of course, the potential for a new breakout on the S&P 500. We have some nice, useful information in today's video, and we're not going to waste any time either, so let's jump right into it. Starting off with what happened in the market today, 75% of the S&P 500 closed up in the green, so there was some good market breadth, and that's never a bad thing. Looking closer at SPY, today it closed right around $611.87. As we look closer on an intraday chart, we can see this all-time high is so close at the $613.23 area. This all-time high was made on February 19th of 2025, of course, and we are kissing this all-time high. While this recent price action is great, what I really like more than anything else right now is the type of movement we are seeing in pre-market and after hours, because this shows you what the smart money is doing. As I'm sure a lot of you know, but some of you might not know, most of the S&P 500's returns actually come when the market isn't even open. As we can see from this data here, basically, most of the returns happen in pre-market and after hours. Now, there are multiple reasons to explain this, like the lower liquidity, some big news events that could happen in after hours, but in the most direct sense, most of the smart money is trading during this time. That's really only who is trading during this time. And basically, when we see moves like we are right now in the S&P 500, where we are seeing the market rise during this time, what this shows you is that in that crowd of so-called smart money, like hedge funds and other institutions, there are so much more buyers than sellers. And just like we saw during the April massive sell-off, when we were seeing mega gap downs, then the market ended up just tanking afterwards, we're kind of seeing like the opposite effect right now, where we're just seeing a lot of smart money rush in. And we can literally prove this because when we go to this data here, we can see that Bank of America institutional clients are buying into tech stocks at their most rapid pace since 2008. So there are no complaints here. So literally what we're seeing is smart money and hedge funds and just broader institutions rush into the market right now, partially because they're scared of missing out. What's very interesting is that when we look at the market over these next few days, especially for tomorrow, there aren't any major earnings scheduled, but there is something much better. Tomorrow, 1 hour before open, we will have important PCE inflation data set to release. This is important because this is the Fed's preferred inflation gauge, and according to analysts, core PCE prices are expected to rise by 0.1% month over month, which is the same pace as April, and this would result in a 2.6% annual increase compared to 2.5% in April. And considering the Fed's inflation target of 2%, that basically means inflation is still a little bit too aggressive than what the Fed would like. And of course, everyone is looking at the Fed right now to see what they're going to do with interest rates, because everyone wants those rates to be cut, so then we could see potentially even further market gains and potentially even more strength in the economy. Now, here's the thing. If we do see the PCE data come in higher than what is expected to come in at, which is 0.1%, that can be a bad sign. So if we see it come in at 0.2%, 0.3%, or anything else that is showing that inflation is hotter and more aggressive than expected, that can be something that certainly throws the market off. It's not expected to come in at 0.2% or higher, but if it does come in, that is a risk, and I wanted to say that now so you could have the information ahead of time. Again, this is going to release 1 hour before open. Now, I will say in a broader sense, we are in a period of very positive forward returns. Basically, we can see from this data here, when the NASDAQ recovers from a 20% dip to a new one-year high, which is something that we saw earlier this week, the returns are generally very positive. Like, these returns aren't even good, they're great. And when you could see, like, the further out you go, of course, the stronger the returns get, but also the higher the likelihood we see of positive returns. the most dangerous point during situations like we are in right now with the market is in this like 1 to 2 weeks later mark. But to be honest, like even in those situations, the market has popped up 67% of the time, and the returns have been very strong. So that is great to see. And then also when we look even further on like a month by month basis, we can see that July is actually the best month of the year in a post-election year, which is what we're in now, and it's the best year over the past 20 years, or best month over the past 20 years. So we are in a very historically strong time right now. And another thing that certainly stood out to me is that when we look at the data over the past 10 years, which is the green bar on this chart, we can see while July isn't the strongest, November is, but we can see that over the past 10 years, July has been like exceptionally strong. So all of that is to say is that the market normally does good around this time of the year, and it normally does good in situations like we're in now. So actually looking at the market right now, again, that 613.23 area, $613.23 is the level to watch on the S&P 500. We are so close to it right now, and considering we had that inflation data set to release 1 hour before market open tomorrow, there's a good chance that we could potentially get very close to it and potentially even break it as long as the data comes in good. As we can see from the levels that we have plotted and have you could say had plotted on the chart over the past few days, 612 is another key area. We can see this is posing as a little bit of a resistance level. We briefly got through it today, but rejected back down. So just keep like a brief eye on like 612 for tomorrow. Another level of support now is 611, and then 610.50 is another level to pay attention to. And if you're someone who's been riding this uptrend, first of all, congratulations, because you've probably made some good money recently, but also, too, make sure to trade smart. If the market starts trending against you in a way that you're not comfortable with, then get out. It's always okay to re-enter, but it's not okay to just bag hold onto losing trades because you're trying to avoid cutting a loss, even though you know it's time to. So just keep that in mind. Tomorrow should be very exciting, though. And besides that, let's get right into some specific setups and predictions. A stock that is definitely on watch is Enphase, and it is to the upside. This was a big money trade from yesterday, and it crushed it today. So basically, we were looking at this stock yesterday. We're a $9.8 million call buyer, came in at the 50 strikes for June 18th of 2026. Not only do I really like the price action and momentum here, but we're quite literally following in the footsteps of someone who dropped $10 million into this trade yesterday and is up over $4 million today on it. So I think that says a lot about the quality of the setup. While the immediate price action is really great, that doesn't mean Enphase has to rise tomorrow. This trade is more so being looked at in a broader sense. Of course, the trader here has all the way out until June of next year, but like in the short term, there is some like really good price movement happening, and I wouldn't be surprised to see a multi-day to week continuation, as we have seen with this stock many times in the past, like in the recent past especially. So it's definitely on my radar for that. And again, there was a recent big money trade with it as well. On top of that, when we look at the book map, there are very thin sell walls overhead. Like the largest sell wall that that exists on this stock is at $50, and the stock is currently at 43 right now. So not only is it very far away, but also too, there's only 4,500 shares stacked up. So basically, there's no one really looking to sell this stock, and I'm not all that surprised by that, considering the stock fell from $340 a share all the way to $32 per share over the past few years. So anyone who would have sold, like, certainly has sold already. And then, like, in a shorter term sense, anyone who was considering selling definitely would have gotten stopped out from last week's gap down. So basically, I think there's like a large like buying imbalance here, and the way in which it's moving only brings in more buyers. So it's definitely on my radar, and I'm very excited to see how this stock continues to do, not only in the short term, but especially with this big money trade. That's very nice to see. But another stock that is definitely close on watch is OKLO, and it is to the downside. This one was mentioned yesterday, but we didn't see like a true break just yet. Basically, yesterday they were running up really well in pre-market as they had news where they're having strategic collaborations to boost their critical fuel that's needed for their advanced nuclear reactors.